It's Friday, April 16th, 2021, and we've got a trio of 9-digit deals to cover from this past week. Loopio accepts a proposal for 200 million US. Perpetua needs to perform for 250 million US. And goeasy and LendCare unite in a $320 million Canadian deal. Let's get started. First up, Loopio accepts a proposal for 200 million USD. And if you're in the loop, you'll remember Jafar from Loopio first presented at TechTO in 2017. Back then, Loopio was still a bootstrapped startup, and now it's just raised a monster round. Alex, tell us about this raise.
Just one comment before we get to Loopio. Jason, next week we have to be on TikTok Live. I keep on asking, you're disappointing me here. How are all the kids going to find us?
Superstar. Okay, we'll get it working. We'll get it working. All right, tell us about this raise, Alex.
Well, maybe before I get to the raise, let me explain who Loopio is. Loopio enables companies to grow faster by streamlining the process to submit RFPs. That's a request for proposal. If you're a big company or if you're working with large enterprises, they usually ask this request for proposal. It traditionally takes a lot of work. It's just very time consuming. Loopio makes that easy. So, and just now a bit of background on Loopio, they've been relatively capital efficient. And I think they've announced a $9 million raise before, and then now they've gone to this huge mega round, $200 million USD from a private equity firm called Sumera Equity Partners.
Now, do you think Sumera used Loopio RFP software to respond to this deal?
Maybe Zach and the team use a RFP to ask for money from Sumera.
I love that. So I think it's great that we have a special guest here. We've got Zak from Loopio here to chat with us a little bit more about this deal. Over to you, Zak and Alex.
Hey, Zak, thanks for joining us.
My pleasure. My pleasure. Thanks for having me and doing the Loopio intro for me. It's awesome.
Well, I'm glad I could do it. You know, it's funny. I think your business is quite straightforward, but I think most people don't know about it. So why don't you take us back to like why you guys started Loopio and a bit of the history of the company?
Yeah, for sure. No, pleasure to be here. Hi, everyone. I'm Zak, co-founder and CEO of Loopio. And like Alex mentioned, we are RFP response software. So for companies that are selling into regulated markets or selling into large enterprises, responding to RFPs, responding to complex questionnaires is a pretty daunting task for sales teams, especially when they're doing it at scale. Lots of content, lots of different questions, a lot of different documents. We help kind of streamline and accelerate that whole thing and ultimately help companies grow faster. So all of this started back when I was a sales engineer. I was helping enterprise sales teams respond to RFPs and security questionnaires and all of those diligence compliance documents that you get in the enterprise sales cycle. And looked to the market, didn't really see anything compelling to help with this use case, and realized that it was a pretty complicated process. And that's usually how most entrepreneurial stories start, right? Is experiencing the pain firsthand, dealing with all these different, RFPs in the enterprise. And so eventually got together with my co-founders, Matt, who's our CTO, and Jafar, our third co-founder. And with the three of us just started building in 2014 in a bootstrap way. And, I can explain more of the journey, but that's really, really how it started. Experiencing a pain, having an idea, and then just getting to work.
Now, your journey's been relatively capital efficient so far. You said you bootstrapped. You did a $9 million round, I guess, a couple of years ago. Yeah. And you go to this massive round now. So tell us how this came together and why you decided to basically take a lot of money now.
Yeah, I kind of see the company in like three distinct chapters, Alex. Like the first, and it's actually a great point. I think being bootstrapped for the first few years of our journey, we took the company to a few million in ARR, 20, 25 employees, a few hundred customers, just with no investment whatsoever. Like not a single penny of angel investment. Like it was literally small founder loans into the business, and we just built up. And that was because we could build product ourselves, and we just did it organically. That forced us to be like really disciplined with how we spend money, how we invest, and actually making sure that everything we did was producing customer value. And I think that was really the first chapter, like building that foundation. And I think just building that discipline. Then when OpenView invested our Series A in 2017, that was the $9 million round you're speaking about. That was really an inflection point for the business where we saw, hey, there's a market opportunity here. We're emerging as a category leader. Let's just go for it. And we just accelerated. But even through that acceleration, we stayed fairly efficient. We haven't, before this mega round, we hadn't raised since that 2017 point, and we continue to grow the business, up almost to 1,000 customers. Now we're more than 1,000 customers. just keeping some of those bootstrap roots, but still being aggressive where we saw opportunity. And I think layering funding on top of bootstrap roots like helped us to scale in a very unique way. I think, and now like this kind of brings us to the current juncture where we just see like a massive global opportunity, $2 to $3 billion TAM that is like 10% penetrated, where competitive kind of landscape is heating up. There's opportunity to grow faster, and we're just ready for another inflection point. And so, we didn't need the money, but we saw the opportunity. The market timing is right. We had a great, momentum from the last 6 months of the business. And as you've seen from financing, timing oftentimes is everything. And so we saw that window, and we hit it hard, and ran a bit of a competitive process, and here we are.
So what can you share about how this changes your thinking? Because before we got live, you mentioned how you've already seen an impact on ambition, how you're thinking. So what do you think what's going to be different from Loopio, at least in the next 12 to 24, 36 months? What does this enable you to do differently?
Yeah, I think it's like becoming the undisputed leader in this category, with a lot more conviction. And that means like being more aggressive with our product development. It's about, thinking about global expansion more aggressively, continuing to invest in our people. It's what does it take to build 100 million ARR plus company? We believe, and like we have so much more conviction about that market opportunity being there now. And then having a partner like Sumeru who really understands this leg of the journey. So like north of 20 million in ARR, what it takes to actually scale towards, being 100 million ARR plus company, potentially a public company one day. So having that stage specific investor that really cares about, product and has an intelligent view on the market. I think that's some of the mix in thinking that's happening, right? It's just like a natural inflection point for the business.
And one thing I've noticed about your journey, Loopio is known as a community participant, but it doesn't have a big brand name, isn't a splashy awareness. Like, I don't see typically Global Mail writing articles about executives leaving or coming. Was this by design? Is this something other founders should do? What's the thinking behind that?
I think we're pretty out there, Alex. That's not very nice. No, I'm just joking. Yeah. So look, I think this is what happens. Like if you're on a venture train and you're raising every year and you're going to get a little bit more exposure. I think we've built an incredible employer brand in the Toronto tech ecosystem, but by focusing on doing the work, not on the headlines, right? Focus on producing real customer value, building great culture, building a great team, and those little things add up over time. And I think when that stuff comes to market and it's like at scale now as it is, it's much more sustainable. And so I think that the lesson here is that there's no right single path to success, but like just because you're not reading about a company in the headlines, you're not seeing those, fancy, TechCrunch headlines about venture financing doesn't mean a big kind of enduring business is not being built, right? And we've always kind of focused on just keep focusing on building a great company, and the rest will kind of take care of itself.
And for the people listening to this, live stream or listening to the podcast, if you're a founder, what's the takeaway for the ecosystem? What can they learn from this news? Just love your insight for other founders or tech enthusiasts.
Well, I think everyone knows the market is great right now for SaaS companies that are scaling. I mean, you see that in public and private markets. It was really eye-opening to run this process virtually, Alex. Like we had not met Sumeru before the beginning of this year, and so think about that, like a $200 million check being written, end-to-end process, never meeting in person. Like it's just wild to think about. And we had built so many investor relationships before, going to market this time around. And I thought that we would end up taking a round of funding from somebody we'd already built a relationship with. So like truly like this, what's possible in a virtual world now is just completely eye-opening and then remarkable. I think like, and just there is something about this like moment that we're in, and then running this like virtual process, and then just having conviction. I think at certain points in there really are inflection points in your company's history, right? And so like that finding those moments and that timing, and as soon as you see that window, not hesitating and just going for it. I think as a founder, as a CEO, that's your responsibility. And so obviously a lot of people help me kind of do that, but that's something that I noticed is just around timing, and having conviction was a big part of this moment.
Thanks so much, Zak. Congratulations. And I do agree, you have a great employer brand. And thanks for taking the time to share some share the news and the analysis of it with the community.
All right, Alex, I want to know why you think this is interesting for the TechTO community. We heard Zak's take. What's your take here?
Well, I think there's a few things here. First of all, I think it's a role model for what other founders should think about building a company. They went to an unsexy area because I think lots of founders get attracted to whatever the biggest, newest, trend is. Let's go start. I don't know. Right now, it's community software, work from home software, or future work software. And instead of being attracted by the headlines or the sexy new space, Zak and his team found something where there's a real problem, focused on building sustainable business, did whatever they needed to do next step. Like they built the strong employer brand without the buzz. And I think it just reminds that at the end of the day, it's not about short-term awareness, but it's about long-term success. You have to build a business, and you have to make it sustainable, and you have to have a real customer pain point. I think that's what Loopio's done. I think along the same lines is just reinforces it doesn't have to be in a sexy area. Like, RFP, I'm sure Zak dreams about it at night. Loopio team's super excited about it, but I think if I went out to 95% of the people I know and said, what's an RFP? And why do you need to automate it, and what software's around there? It's not exciting, which has a benefit. There's not going to be 100 other companies doing that at the same time. You have to be really passionate and want to build that business. And I think the last thing which the takeaway here is there's a lot of non-traditional capital looking to help grow your business. So you've got anything from alternative sources of financing like Clearbank and Pipe to growth PE firms who are, if you just listen, they're all over this ecosystem looking for investments like Loopio. So I think founders that are a bit later stage, they want to go raise from Sequoia, and everyone wants to raise from Sequoia, but there's probably 100 or 1,000 types of financiers that you haven't thought about, and you can do it remotely. So it's a good time to be raising. There's more money out there than you think.
The end goal, Alex, is to build a great company, not to get the TechCrunch headline, as I said, which I love. Now, if you want to be part of the 1% that knows what RFP stands for, right, Alex? You've got to read the TechTO newsletter, where you can keep up to date on the people like Zak and the companies like Loopio that are shaping the Canadian tech ecosystem. Alex, the Friday edition went out this morning. Tell me your favorite part of the edition.
Well, I'm biased. I always like the startup profile. Today we did a profile on Bloom, which is building a community for semi-retired and retired people. They're helping them get connected, or helping them continue their education and keep excited about being more robust and well-rounded people.
I can see you're already planning your retirement. I like that, Alex. Hopefully the portfolio.
According to you, I'm retired already.
And you can be a bloomer today. All right. Next up, Perpetua needs to perform for 250 million USD. It feels like we've been perpetually talking about this team, with Perpetua's CEO Joe presenting at TechTO in 2019, and VP of Growth Adam first presenting with his previous startup Tab Payments way back in March of 2015. Why is Perpetua making news again this week? Well,
out of nowhere, at least to me, it seemed Perpetua got acquired, announced an acquisition yesterday, or were acquired yesterday. And a very interesting deal. They're being acquired by London-based Essential, which is a technology company listed in the London Stock Exchange. And I think if I get it right, it's like roughly 50 million up front with a payout up to 250. So very creative deal. And there's a lot of good reasons. I think this proves a lot. It builds on a lot of thesis and trends I've seen in the Canadian ecosystem.
And what does Perpetua do?
So Perpetua, like this, the way I look at it, I'm going away from what they say on their website. They talk about the growth infrastructure for e-commerce. What I look at, their initial product gives you superpowers if you're not advertising on Facebook or Google. Facebook and Google built up all these tools to advertise in their ecosystem. Then you go to Amazon or you go to Instacart and you want to advertise. It's pretty bare bones. And basically what Perpetua does is basically give you those superpowers so you can optimize your advertising, get more intelligent about how to go to market and get more for your marketing dollars and grow faster.
Now, I mentioned at the top of this segment that Perpetua's VP of Growth, Adam, presented at TechTO back in March 2015 when he was the founder and CEO of Tab Payments. I just wanted to share this throwback of a young Adam up on the TechTO stage at Telus House. And I also wanted to show what I think was his crowning achievement at Tab Payments, which was powering TechTO's Tromba Tequila Bar with our own TechTO signature cocktail. So maybe we can get a Perpetua Pina Colada when we can finally bring back TechTO in person. And I'm really excited to say that we've got VP of Growth, Adam Epstein, here to chat about the deal with us today. Over to you, Adam and Alex.
Jason, that pick was amazing. Youth is king, huh? 2015, that was a long time ago. Whew.
You've aged well.
Thank you. Appreciate that, Alex. I don't feel it, but
I don't think anyone feels in today's day and age when you're locked in all the time.
Alex, I loved your description of us. I know that you've been thinking about that hard for at least several weeks, but I think you were spot on with the description. You even got our mission down, giving superpowers to anyone that sells online.
Well, I do actually think what you're doing is quite amazing. And you're like, again, from the outside in, I think you found a problem that most retailers have or most people have in advertising, and you went and solved it. Maybe you can tell us a bit more about the company. Like, I saw some stats out there. What can you share about the company, and why do you decide to sell right now?
Sure. So Perpetua, as you mentioned, provides growth infrastructure for e-commerce. That means that we build best-in-class software tools for e-commerce advertising with a specific focus on marketplaces. So many people may not know that Amazon made over $20 billion on advertising in 2020. That's growing 30 to 40% year on year. And other retailers are following suit, like Walmart, Instacart, and Target. And so a lot of these advertising platforms are very nascent, and it's very manual and cumbersome to do the best possible job at optimizing those ads and building your brand on those marketplaces. So our company, we're a 60 plus person team based primarily in Toronto, has worked really hard over the past 3.5 years at building best-in-class tools to support advertisers on these marketplaces.
You seem to have good traction, good momentum. Why sell now?
So I think it's not really a thought of why sell now, but who the acquirer is. So Essential, as you mentioned, is a public global technology company that owns and operates a number of different assets within their portfolio, specifically within advertising and e-commerce. So one is the Cannes Lion Festival. So that's the largest advertising festival in the world in June every year. Another is Flywheel Digital, which is the largest e-commerce advertising agency, as well as a number of other digital analytics companies like Edge and some companies in China that will help us expand globally. One of the things that many people do not know is that Jeff Bezos outwardly says that there's 60% of all GMV on Amazon is from third-party sellers. So these are people that have a marketplace relationship with Amazon and not a vendor relationship with Amazon. Well, of that 60%, 30% are Chinese sellers that sell into the American marketplace. So we believe there's a massive untapped opportunity here that we hope to leverage our new parent company to become a domain leader in Asia as well.
And so I like this. So you're saying it seems like you have momentum, and this is basically going to accelerate your global reach and access to different markets and different customers. What does it mean for the team on the ground here? You said you're I think in this press release, you're around 66 people. Most of them are in Toronto. Are we going to see, Adam, once this is over, you guys going to be flying all over the world, building teams up in London? Or what's the future hold? What's the implication for the team?
So one thing I want to clarify, Alex, from the email in TechTO today is that this is very much a Canadian technology success story. I think that you as editor-in-chief of the TechTO email alluded to this being an American company with a large team in Canada. Many people know that a lot of these companies, a lot of technology companies will have a US Delaware entity for the purposes of fundraising that will have their team in Canada. And this is very much the case here. Our CEO, Roscoe Hill, resides in Montreal. He met our president, Joe Rideout, in University of Waterloo Comp Sci. They were roommates together in first year. And this is the same, success story that many other technology companies have. And we are a very proud Canadian technology company. Every single person on our team resides in Toronto, except for our CFO, Dave, who's in San Francisco. Shout out to Dave. But this is a very much a Canadian success story. This is a global public company staking a claim and investing in Canada and Toronto. And we are very, very excited to continue to grow our team with global ambitions, albeit with a Canadian headquarters based in Toronto.
I love that. And I knew most of the team was here I'm sorry if I had some wrong information.
It's all good, man.
But tell me, so you're going to still invest in Canada. What's the opportunity for this team, and how can you bring more Canada to the world?
Yeah, I mean, we think that this industry is $100+ billion industry, of which the 20 billion that Amazon made in 2020 is simply scratching the surface. And we want to encompass all marketplaces. So there's a funny thing is happening in this world of e-commerce, is that traditional retailers are building e-commerce arms, which are thereafter building media arms. And then media companies are quickly becoming commerce companies. Instagram and Facebook are becoming a store, and Google is building out their commerce capabilities as well. So while Amazon will very naturally always be a large piece of our revenue, just given their total share of e-commerce, the other retailers and other media companies are where we hope to expand. And we think that we have a lot of runway to go, of which this acquisition allows us unfair advantages to get those wins that we need.
Cool. So this acquisition sounds very important. How did it come together? Were you approached? Did you reach out to Essential?
You'd have to talk to our CEO Roscoe Hill about the details. But Flywheel Digital, the largest e-commerce agency globally, has always been our largest target customer. And we've had ongoing conversations with them for a while. They are in the Essential family. And through those conversations, we got to know them. They got to know us. They recognized benefits in partnering with a software company, the same way we work with many, many other agencies across the US and across Europe and across Canada today. And very quickly, our potential largest customer became a partner of ours in some ways as a family member within Essential.
One last question. You've taken a journey to get here. Even before that 2015 picture, you started thinking it was huddlers. You used to be a lawyer. You said, okay, the tech startup world's where it needs to be. What advice would you give to someone in your shoes, I guess now 8 years ago, or not, lawyer, and says, okay, I want to be in tech?
8 to 10 years ago, when I was starting my first company, this support system of folks like yourself and TechTO and investors and other founders ceased to exist. It was a lot harder because there were so few of us. There's so much support and there's so much opportunity here that I would just say, take that first step forward and do it. There's no better way to be a founder than to actually start the company. And the toughest part is starting. So if you're passionate about solving a particular problem, go do it, work your tail off, and hopefully you'll have success.
Cool. Thank you so much for your time, Adam.
Thank you.
I'm looking forward to the pina coladas.
Yeah, me too. And we know that Adam is a longtime listener of TechTO Quick Takes, and he's given us feedback that his absolute favorite part of every segment is hearing from the #1 commentator of TechTO, Alex Norman, his takes on why this is important for the TechTO community. So Alex, you tell us, for Adam, I want to know, why should the TechTO community care about this Perpetua deal?
Well, I again, maybe it's a McKinsey person, but there's at least 3 reasons here. One is it shows upside of not raising too much money. I think this deal and the flexibility and the creativity of the acquisition couldn't happen if Perpetua had raised a ton of capital and had a lot of outside stakeholders. They've been relatively capital efficient, again, about 10 million raised to date. At least that's what it says on Crunchbase. And, that enabled them to go to what's the potential biggest customer and strike a deal to be acquired by them with some cash up front and a big earnout. So it shows, again, creativity and fundraising. And there's not one way to do things. Second thing is, I love that the acquirer is not from the US. It's a global UK-based business that's looking to build a team here and take advantage of technology that's built here, where I think you've got most of the team here, and it'll provide hopefully more know-how, spin out more companies in an area where I think we're strong, because I think Perpetua is basically an e-commerce business that's focusing on part of e-commerce. Because if you look at who our clients are, look at those marketplaces, they're all e-commerce businesses. And I think we're starting to build a spike in Ontario of e-commerce related businesses. And here's another one that's going to scale up, create more talent, which will then recycle in the ecosystem and create more startups that can succeed and have seen success. And then finally, for me, it's just good to see Adam succeed. I think it's been a long journey. It shows also how tenacity pays off.
I love it. I know he'll be listening to that over and over again, together with the rest of the TechTO insider community. Because Alex, if you want to join a community of Canadian tech founders, entrepreneurs, and investors, you've got to check out the TechTO.org insider membership program. Alex, me and you are there every day answering questions, making introductions, and helping grow the community. Who have you met recently in the insider community, Alex?
Well, I met Jenny Lemieux. She's a co-founder of Vivid Machines. Great background, and now she's partnered with Jonathan. They went through the EF program. And what they're doing is they're creating an ag tech company, which is going to help basically farmers optimize their yield. So a bit of hardware, a bit of software, and can't see more enthusiastic, excited insider than Jenny. And she's on a journey. She wants to learn from others. She wants to contribute to others. And I think she's just another reason the community is so great.
What incredible community that you are building in the TechTO.org insider program. Next up, goeasy and LendCare unite in a $320 million deal. Alex, what's the news here?
Well, goeasy acquired LendCare for about, was it $320 million? Canadian dollars. Two Toronto-based fintech companies. I think most people don't refer to goeasy as a fintech anymore because they're big, they're publicly traded, but essentially that's what they are. They're using technology to provide finance. They're just a bit older and a bit more public than everyone else. So really interesting deal. Are you familiar with either of these companies, Jason?
Let's break down both of them. Let's start with goeasy, where you started, and then let's move over to LendCare.
So goeasy, they're TSX listed, 1.4 billion market cap, which also is important to know when you're acquiring someone for 320 million, 650 million in annual revenues. And they basically have two core products. And if pre-pandemic you ever rode a TTC, you'd probably see advertising for both of them. There's Easy Financial, which offers high interest loans to subprime borrowers. And there's Easy Home, which sells furniture and other goods on a rent-to-own basis. So if you go to a furniture location that's partnered with them, you want that couch, you don't want to pay $3,000, you can't put it on your credit card, you get paid out over 30 monthly installments. And it got scaled, 2,000 employees, 400 leasing locations, 1 million Canadians have been served by them and have used their products over their lifetime.
Wow. And now tell me about LendCare.
LendCare started in 2004. They're a point of sales consumer finance company. So what they do is enable, just like Easy Home helps you finance furniture, what LendCare goes to partners and says, we'll let you at checkout, let their customers take a loan and finance this product over time. They have 3,000 businesses that use it, and they've had 6 billion of loan applications to date. So you got a company that's about 17 years old, has a good distribution, has a product which is sort of en vogue now. Like it's sort of like the buy now, pay later companies you see in fintech.
Yeah, we've talked about that over the last couple of weeks. There's some hot companies in that space.
Yeah.
So you've got just over $1 billion company making a $300 million acquisition. Why does this deal happen, Alex?
I think this is one of the more simple deals I've seen out there. Company wants to grow. They need distribution. They need a new product. It's a match made in heaven. And they can afford to make it. It's about 20% of their market cap. It's not like they're giving shares for it. It's shares and cash. They had financing lined up. So pretty simple rationale, pretty simple deal to get done.
And so simple deals still can be powerful deals. What do you think is so interesting about this particular Toronto FinTech union for the TechTO community?
Well, first of all, I love it's a Toronto company buying a Toronto company. It's the money staying in the ecosystem. FinTech couldn't be hotter. There's financing every week. There's acquisitions every week. And again, with a FinTech play, a Canada-only play works. It takes time. Both these companies are over 10 years old. But the market's big enough. Finally, old models can be reinvented with technology. Lots of these fintech plays are new efficiencies, lower cost, new distribution models enabled by technology. So it's interesting. You don't have to reinvent the wheel. You just have to think about how to make it better. And what the other interesting angle is, lots of pre-2010 companies like LendCare don't seem to have any traditional VC money, don't have angels. And what I wonder is, what's the impact, if any, on the ecosystem from this exit? Is there going to be money that flows back? Because they weren't really, there was no ecosystem to be part of back then. So it'll be interesting to see what the long-term impact is.
I'm excited to follow that story as well. And there are a few places that are better than the TechTO live streams to keep on top of other emerging stories, Alex. Coming up, we have TechTO talent. I'm super excited for this. Whether you're looking for your next technical role or you want to learn about the strategies behind hiring technical talent, you got to come out and join the conversation on Wednesday, April 21st. Alex, who are you looking forward to hear and speak at Hiring Technical Talent on April 21st?
Well, there's so many great companies going to have a booth there. So I can't just name one, but if you force me to, who would I'd say Moonshot Brands. They're one of the newer companies in Toronto. They're going back to e-commerce. They're basically rolling up a bunch of e-commerce companies, and then they're going to supercharge them with shared services and a better team. So they're looking to ramp up their teams.
Very cool. And then we have Founders and Funding, the untold stories behind the raise, where you, Alex, sit down with a venture-backed CEO and the VC partner that made the bet for a candid conversation of how it all happened. Who's joining you on Friday, April 23rd?
That's a good question. I'd have to look it up.
I can tell you. Do you want to know or do you want to guess?
Is that Andre Charoux?
It sure is.
It's Andre Charoux from Maple VC and Kevin from Live
Stadium.
Stadium. Sorry, you didn't give me the notes. No, and because I'm just so excited because we have for the next 3 months we have just an amazing group of founders and funders. So just all of them will get me more excited than the last one.
So we hope you can join us live. You'll also be able to listen later on TechTO's Founders and Funding podcast, available wherever you listen to podcasts. And then 8 contestants, 8 never before seen pitch decks for entirely made up tech startups. What could go wrong? More like what could go right? Come join us for our first ever pitch karaoke with our friends at Entrepreneur First. You think you have what it takes to compete? Entries are open until tomorrow, so you still have time to get one in, and anyone can join the fun and watch the finals on April 29th. What do you think of that, Alex?
I can't wait. I hope me and you are participating.
I think you will be pitching. Holy cow, what a week in Canadian tech. If you haven't already, like and subscribe wherever you're watching or listening. We'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.